I was speaking to somebody recently who is also a proponent of the momentum strategy. And what he was saying is that he's not yet confident that he can play that full tilt. Uh, he has seen sideways movement over the last few months in the Indian equity markets. I'm curious to understand what you think about the trends and the sector rotation that we've seen over the last couple of months. How
Yeah.
do you read that right now?
Well, to me, like I think it's hard to keep focused on what matters most when you're in the throes of a lot of uncertainty and bear markets and the capital loss and et cetera. And at the end of the day, you have to keep discipline to your process. And to me, what I'm constantly looking for during bear markets is what's performing better than I would expect it to perform given the environment. And examples of that would be like in the global financial crisis when unemployment was in the north of 10%, depending on which measure you use, and the economy was crashing, and risk assets were obviously for sale at that time, as we all know. In that moment, what was surprising to me was that the consumer discretionary sector, which is basically benefits from all these from consumers, and presumably they're all in the unemployment line. Despite all the concerns and fears, the consumer discretionary sector actually was one of the best performing sectors during the global financial crisis. And also at the same time, a very risk-on sort of growthy industry within the market is biotech. And during the global financial crisis, all these things went down, but these two sectors went down less than the market. And don't you know, when the market bottomed in 2009, after the initial bottoming phase, what actually went on to lead the market, of course, sharing leadership with a few other sectors, but for sure, some of the strongest leadership came from the consumer discretionary sector and biotechs. So the market has a way of tilting its hand and showing you its cards in terms of what it's sort of discounting for the future. And I think it just pays during these crisis moments, if you will, to really pay attention to those parts of the market that are actually doing better than you would anticipate. So all of that is to say, when I look at the markets today and I'm trying to find those things, what really jumps out to me is how strong the Sensex has been, equities here in India. If you look at this chart here shows you this chart here is showing you in the top panel is the Sensex relative in local currency relative to the S&P in local currency. So there's no currency effect in here. In the middle panel, that is the rupee relative to the dollar. So when you see a declining line there, that indicates that's rupee strength. So this is the USD INR, and so you can see that when the rupee is weak or that line is rising, the Indian stocks tend to underperform the U.S. market, and we know this. Whenever the dollar is strong, that tends to be a headwind to emerging markets. And so you can see that playing out here. And if you look at the bottom panel, that's showing you the rolling 52-week correlation between the relative performance of India stocks relative to the U.S. In its correlation to the USD INR. And what you can see, there are moments where it's positively correlated, but for the most part, you can see that red line in the bottom panel there, that's zero. Anything below there indicates negative correlation, which is, again, what you would anticipate. But when you look today, where I have that circled, that's showing you that the current correlation is 91.91 or 91%. So that indicates that the correlation, if you look across the chart, this is the highest positive correlation that this relationship has had in the past 20 plus years. So this is really what you're asking about, unprecedented, at least in the last 20 years. This is the highest positive correlation that we've seen. So what I find interesting is as strong as the dollar has been against the rupee, you can see the chart in that top panel, how the Sensex has been, regardless of that, has been outperforming the S&P 500, which I think is something that, again, is in terms of the market giving you one of those tells as to what is likely future leadership once the dust settles in this crisis that we're in. I want to be really mindful of being open to owning emerging markets with a special eye on India, because it's been incredibly strong.